Ira Epstein of Linn and Associates with your metals market update for this risk on day. You heard what I said, risk on day for Monday, and this is the 1st of July 2019, just about 3:45. Why is it a risk on day? Well, let me explain. The stock market up strong, gold down sharply, Bitcoin beaten up, that's June, I should have had the July there, but it was down over $1,000 today. Down in the bonds and the notes, Japanese yen down. So markets that had been getting a bid because they were so fearful of U.S.-Chinese trade reversed course, and the stock market went in some indices to new highs. That's what I'm going to call the risk on. In OPEC, what's taking place is OPEC has reached a deal between themselves and Russia where they're proposing going to a 9-month production cutback. Normally it's 6, so instead of ending in December, they want to end in March. Everything I read said that that's because Russia had pushed for that, knowing the Russian winters there, how difficult it is for them to get their oil production numbers up. They might as well go then. Remember, if everything came out good and world economies picked up, U.S.-Chinese trade deal did occur, oil could always be said, now we're going to produce more, and they ended early. These are just ideas to keep the market, if you will, bid, which is important to all the oil producers. When we take a look at gold, you can see you've now gone from 1370 on what I call one of these magic runs. Market went up, now look at that. It went up $125 or so. It's pretty insane how much it went up, and you're just starting to get a correction. So today you're down basically 1.9% on the week. Last week you were up on the week 1.25%, so you're already down more than you gained last week. That's the point that I'm making. Support's all the way back down here on the weekly chart at the 1314 level, $100 an ounce cheaper. I'm not saying it's going there. I'm saying that's where the 18-week moving average of closes is. When I look at the chart here, you've got something of a gap in through here. It's a breakaway to the downside in one way. You can argue that you've got now the lower highs, lower lows. That's the definition of a downtrend. I look at this market, 1427.80 is the number it shouldn't take out. If I go to the chart action here to fill the gap from Friday, the low was 1408.60, so between today's high of 1401.90 and that number, there's a gap of sorts in there. So we look at that as an area where the market could run into resistance. And that, by the way, would not take out the 1427 area. The market is still well above the 18-day average of closes. So what have we got? We have the trend down is defined by the swing line, but the bias up, because you're over the 18-day average, with support is defined by that line in the sand, the possibility of it being now $15 away at the 1371 level. In terms of Bollinger Bands, when we had this vertical rise, you did go up over it 1, 2, 3, 4 days in a row. You know my rule of fives. It's rare that you get that 5th day. You can, but it's very rare that you stay over a Bollinger Band that amount of time, because the basic theory of the Bollinger Band, that's this number, the black one there and there, is the market will trade within those bands 95% of the time. So if you want to bet on successive moves that'll keep going, generally there's somebody waiting to be at the other side of that trade. I'm not saying it's the wrong thing to do. I'm saying, believe me, 95% of the time, if that's what it's based on, there's going to be somebody at the other side. When we take a look at momentum, it is turned down. So now I've got momentum pointing down. I've got the trend down as defined by the swing line, but I have the bias up. When the bias is up and the trend is down, the two neutralize each other. So I move to the momentum area, which is saying that the market favors still coming down until that works out of being in an overbought condition. What's overbought? Either of these numbers being over 70 is how I define overbought. When we come over now to the next chart, which is going to be our GLD, you can see how this has done the same thing. Lower highs, lower lows, momentum down but bias up. So support right through here, 129.18. You can argue in this chart, I'm going to have to come back to it. I didn't want to do that. I made a mistake. Hold on. Let me get to where I want us to be. Now I can get where I want us to be. Here we go. Taking this 2505 out was the key today. That broke this long-term pattern of higher lows, higher highs. So the trend, as far as I'm concerned with it, just fell out of bed today. What else? If you looked at your momentum on the slow stochastic, both numbers were over 80 on Friday as well. Now you've got one of them well under the 80 level. It puts the odds strong that price and the 18-day average are now going to make a run at each other. In the gold-silver ratio, you finally have some topping action. Nothing yet bearish where it's getting a reversal. You'd have to first get down and challenge this 90-60 level, but silver's starting to gain a little bit on the gold market. And you can see on this chart that the market is still, like gold, in a downtrend as measured by the swing line. You fought a battle for a bit here at the 100-day average of closes. If that gives ground, then you're looking for the 18, and that could be in the cards right now. Now, we have momentum down, we have bias up because you're over the 18-day average. What would turn this market again bearish is a close under 1512.50. The risk would be then not to get back over 1538.50. So tomorrow is the day that the bears, if they're going to take control, have to try that, and it's the day where the bulls say, not ready to quite give up. We supported the market all this time over the 18-day average. Let's see if we can do it again. The copper market, I didn't understand the rally at all. In fact, I don't understand why the U.S. thinks we have a trade deal. I'm lost with it. Nobody has told me, and I read like a madman, that when the talks start, that they start from where they ended in May with intellectual property having already been agreed to. What I've heard is that we're going to let Huawei buy certain products, but probably not everything they want. I did not hear that the U.S. is going to buy their products, by the way. I heard there's more agriculture. Wonderful. What have you heard out of China? Because I've heard nothing. They're very tight-lipped about what went on there. So I think there was a truce, and I question what we really have here. If you look at Fed fund futures, by the way, they're still saying 100% chance of a quarter-point rate cut in July. So market has the back there. But when we rallied up to the upper Bollinger Band, I, like everybody, last night I was glued to see the opening of the market. I wanted to see how traders are going to react to what had been said, because I wasn't as bullish as everybody else. I'm still not, by the way. I don't know that we have a deal. I heard talk. I heard that we're not fighting with them, but I'm not hearing that have made any peace of any type or gotten anywhere on our trade issues. So we fell. First we went to the upper Bollinger Band. We've been fighting there, and you go right back to that line in the sand. You're not in a trend any longer. Today's high was 275.70. That took out the previous high of 275.10. Boom. You're in the middle of no man's land. This is Dr. Copper. They call that for a reason. I think the market realizes that nothing positive has yet been agreed to other than an agreement to talk, but I don't know where those talks pick up. In the platinum market, if you knew nothing else, you're looking, if you're over the upper Bollinger Band and you got a 100-day average, that could be the next resistance point, and that's where the market went today. Still very much in an uptrend over the band. I think the pros are coming out in longs up here because you're now 2 days over the upper Bollinger Band into the 100-day average, and you're overbought. That doesn't mean I'm right. Just looks to me like I wouldn't be surprised if they're doing that. And the market that's been the most bullish in the metals, in my opinion, has been the palladium market. And I think I've said that numerous times here. You still have the embedded reading. It didn't even back off today when the gold market did what it did. This is a market that's got supply problems, not demand, supply. Getting the product is a big issue here. Then we get to the dollar. The dollar, higher lows, higher highs. So if we take a look at the market on Friday, and I show this because on Friday we show the weekly charts, not the daily. If the market had done anything, you still had a pattern of a lower high and a lower low. If you take out the highs of Thursday, that ends the bear trend. You're already oversold. Back here you would hit the Bollinger Bands, and this would put, if you go up, the potential, it's all I can use the word, of the 100-day and the 18-day average possibly offering resistance on a rally. You got up to and through both. You closed over them at 96.38.5. Does this put the upper Bollinger Band in play, or does the market now decide to pull back for the support in this area? I wouldn't be surprised if it pulls back, but the trend is up, the bias is up, and momentum turned up. The dollar took over leadership in the currency realm today. Why? Well, I write about that to a degree. So I've already written tonight's update. You know, during the day what I do is I'll capture headlines. I already know what the market's looking for in the evening trade. I try to jot down especially in the summertime, as much as I can, so I can get a life and go home, have a nice meal outside with my family, enjoy myself. So I've already written this, and this is what my report often looks like. It's not pages long, it's a page long. By design. I'm talking about the headlines tomorrow, what I think of the market, where I think some things are important, and how to do them or think about them. So you get my research. Daily numbers are for those of you that use a study called window envelopes, which a lot of traders don't cover. I cover and teach it in my charting course. And then oral commentary. Now, I also put this out in 3 different ways. Some people want my full research, others want just my commentary, and others want my morning video where I go over 45 charts in the morning and give you trading ideas galore starting at about 6 in the morning. And that's a neat thing in itself. You can try all 3. You can do it any way you want. Just go to our website, www.iraepstein.com. You'll see a carousel of free offers. It tells you all about everything there. You can also click here. It'll take you to that page as well. And if you go under research, everything's explained there on our website. I'm Ira Epstein. You have a great day. See you tomorrow.